Hello guys, welcome to Trading X-Ray. Today we will talk about a new indicator known as MACD, which actually is a moving average convergence and divergence. MACD is a combination of two moving average, and based on particular formula we observe the convergence and divergence of those moving average. Convergence mean when both moving average come closer, and divergence means when both moving average split and go farther. The distance between them shows the trend movement and the momentum of the price. Whenever the market goes sideways, the difference between the moving average become less, and whenever the market has a very strong trend, either uptrend or downtrend, the distance between the moving average become wide. That's how we measure through this moving average convergence divergence indicator. So now let's check about its setting. In moving average convergence divergence, we have fast EMA, slow EMA, and signal smoothing. Fast EMA is a 12 period of exponential moving average. Then we have slow length of 26 exponential moving average, and then signal is a 9 period of exponential moving average. What these settings show, let me explain how these settings are working. So as you can see on the chart, there are mainly three lines. MACD is calculated by the difference of 12 EMA and 26 EMA. Then this is a red line which is known as signal, and signal is actually a 9 period EMA of MACD line. Yes, signal is calculated on MACD. Then we have a base which is known as zero line, and the histogram is plotted on this baseline. The base is actually a base between MACD and signal line. So whenever the market converges, it means the distance between the moving average become close. We can see the cross, and the histogram also will change from positive to negative or negative to positive. As we can see, it is happening right here. Now we will talk about the crossover of those MACD and signal line. Whenever the green line crosses the red line, it is a buy signal, and whenever the red line crosses the green line, it is the sell signal. And you can see, if we buy at this point, we are getting 25% profit in 4 days, and if we sell at this point, we are getting 26% profit in 40 days. Crossover shows the trend reversal, but you also have to take mind that the crossover is happening below the line or above the line. For the bullish signal, if it is happening below the line, so it can lack the strength, because if both line is below the zero line, it means the market is bearish. But even then, you can earn a quick and small profit. And so same goes for the bearish signal. If the crossover happens of sell signal above the zero line, it may or may not give a big down movement, but because we expect that the market is strongly bullish if both lines is above the zero line. But as you can see in this case, we are getting a good sell signal and a good downtrend after that sell signal. Why this happened? Because market is already given a big uptrend, then it became sideways, and then again second cross, we are getting a strong downtrend. So it means the crossover can happen below the zero line or above the zero line, but it doesn't matter. All it matters the price action and some common sense, what actually happens before the crossover. MACD is a very lagging indicator. It means the crossover may give you a very late signal. So you have to be very fast in taking entry and exiting the trade on MACD indicator, that is double top and double bottom. What actually happens in double top, as we can see, whenever the price is moving in this formation like zigzag, and we get one top at this point and second top at this point, and if we connect both the highs of those swing high, we get a trend line, and we can see the trend line is moving up because the second high is greater than the previous high. On the MACD, the highs of both peaks are not equal, and the second high is less than the previous high, so the trend line is going down. So what actually this scenario says, that this is a divergence between price and MACD indicator. So all the traders think that price is making a higher high and the price will move high and we get a strong uptrend, but actually it is giving a sign that price become weak and very soon we are getting a downtrend. And just after it breaks the low of that particular top candle, we are getting a downtrend. Whenever the price is going in downtrend, making lower low, the second low is lower than the first low, and the trend line connecting those lows is also going downtrend. But as you can see in the MACD, the second low, if we connect the line between first low and second low, the second low is higher than the first low, so it is showing that there is a divergence between price and MACD indicator. So most of the traders will think that the price is making lower low, so it will again make lower low and we can get a strong downtrend. But actually MACD indicators is showing that there is a divergence and price is getting strong and it can move up. That the divergence is actually a leading indicator because it is telling before it happens, but actually MACD overall is a very lagging indicator. If we consider the crossover of MACD, it is very lagging and it is very slow. But the concept of divergence, it is a leading indicator. It will show before the price happen. So as you can see, After the divergence, price moves up. That's the power of divergence. As you can see, there is a higher high at the price, and also there is a higher high at the MACD, but the line is going up in price and the line is going down in the MACD indicator, which shows there is a lack of strength in price, and it is telling us that before it happens that we may get a downtrend. But according to the price, everyone will believe that yes, price is moving up and we can take trade again at this point. But after the low is broken of that particular peak, we are getting this downtrend. That's the power of divergence, and this is the double top divergence pattern, which is actually a bearish pattern. Double top and double. Now we will see double bottom divergence pattern, and you can see there is a low made on MACD and the second low, and if we connect those dots, price is moving up, trend line is moving up, and if we connect price towards low, we can see the line is getting down. This shows that there is a lack of strength in the downtrend and price may go up after the high of that lower low is broken. Remember, the divergence is telling you before it happens, and that's the strategy for the pro traders. So if you took the bullish trade at this point, you can get easily this move. That's how the pro traders trade, because they know the price movement before it happens. But actually MACD indicator is a very lagging indicator. It is a very slow indicator if you consider only the crossover of those MACD and signal line. But if you involve some price action and some strategy with it, you can get a lag. You can make MACD indicator from lagging indicator to leading indicator. It is a very powerful indicator. So you have to practice more on the divergence concept and double top, double bottom, rather than relying on the crossover.
Like, comment, subscribe to get more free educational trading videos. Join our Telegram channel to get free trades.